All right. Hello, everybody. This is Nikki James with Cross Country Mortgage, and I'm here for my chat with Chase. Again, my favorite time of the week. Hi, Chase.
Hi, how are you?
I am good. I am good. What are you seeing out there?
Well, I saw that the Fed raised the rate this week, and that's created a lot of confusion. If the Fed raises the rate X amount, what does that mean for mortgages? It's not
Such
always the same, right?
It's not always the same. And it's such a great question. I get people saying, can I lock in today because the Feds are going to raise rates tomorrow? Well, the fact that you know the Feds are going to raise rates tomorrow means that the mortgage market knows the Feds are going to raise. It's already baked in. So what they're raising is short-term interest rates. So they're raising the lending rate that the banks charge each other overnight. That's the Fed funds rate. The prime lending rate is the lending rate that you'll see tied to your equity lines or your credit cards. So that will follow the Fed funds rate immediately. They pretty much go up to the same because that's the rate that the banks then charge their best customers. It's called the prime lending rate. That has nothing to do with mortgages. Why the Feds are doing that is they're trying to raise short-term rates so that the long-term market goes, okay, they've got inflation under control and it settles. Unfortunately, we've sort of got the horses a little bit out of the barn already because we have inflation, obviously. So we're having a problem. So they're trying to catch up. They're trying to raise rates to hedge against inflation. So mortgages sure have gone up, but it's not rate for rate. It's not percent for percent. It's slightly different and will always be baked in. We've pretty much got a 0.5% raise baked in for the next meeting, which is 6 weeks in December. And we had hoped that they were kind of done at that, but the last conversation that the Feds came out with was that they were probably going to do some more in next year. So, we're in track with some more. Your credit cards and your HELOCs are all going up, and
So if
mortgages will
I
probably stay.
so if I was looking for a home last week, this week I should still keep looking if I haven't found it yet.
Yes, rates did not change that much between last week and this
And
week.
the good news is with the rate increases, there's always a silver lining. With the rate increases, we now have more inventory. We're more
Mhm.
likely to be able to get a seller concession to buy down the rate. What does buying down the rate mean to a buyer per month or in the life of their loan?
Yeah, absolutely. So let's just give an example. There's different types of buy downs. There's the permanent buy down, which is where you just pay points. We're talking about a temporary buy down that a seller will pay. And just a note, when the seller pays, they don't write a check. It comes out of their proceeds. So they just get less for what they're putting, for the price that they're selling. So
So
they just
instead
get
of
less.
reducing the price by 20,000, I get the seller to give me 20,000 to give my lender to buy down the rate.
Exactly. And it doesn't pass. They don't write you a check. It doesn't happen. It
Right.
only happens at closing. It's all netted out at closing. So, on a 750 house, the seller would pay about 15,000 and the buyer would get a rate of 5% instead of 7% for year one. Then year two, they get a rate of 6%. And then year three, they'd be at the 7 if rates were at 7 today. So it just gives the buyer yesterday's rates with today's house prices.
And
That's
tomorrow I have the option to refi.
Exactly. I was just going to say that. And with a temporary buy down, that let's say you've only used up 8,000 of that temporary buy down, the remaining 7 gets taken off your principal balance. So you still get it. Whatever the seller gave you, you get that benefit in the future. So it's a wonderful program and we can talk more about it. So we'll wrap up now, but just, call Chase, call me. We love to chat. We're not intimidating at all. There's no commitment. We just would love to help you navigate how to think about buying a house.
Absolutely.
All
Sounds good.
right. Nice to see everybody.